Welcome to the Growth Minded Accountant podcast, where our experts will share best practices on running your firm in the digital age. This podcast is brought to you by CountingWorks PRO. Let's get started.
So welcome to another edition of the Growth Minded Accountant, the podcast where we explore innovative strategies and cutting-edge technologies that are transforming the world of tax and accounting. My name is Lee Reams II. I am the founder and CEO of CountingWorks PRO, and today we have an exciting episode lined up for you. The title of today's podcast is Unlocking Tax Harvesting Power with AI. Yes, we're talking about AI again, and then we call it a growth strategy for accountants. So joining us is a true pioneer in the fintech industry. I've been working with David now for, I think, almost 9 months. We've kind of been collaborating with some tax harvesting technology that we're going to talk about today. But David Lin, he has over 30 years of executive experience on Wall Street. David is the founder and CEO of Linvest21. Before founding Linvest, he served as a managing director and CTO of JPMorgan Asset Management's global investment platform, where he led an award-winning team in financial engineering and authored 3 provisional patents in applied AI. Very impressive. So in this episode, we'll dive very deeply into the world of tax harvesting, a strategy that can significantly enhance investment returns by optimizing tax outcomes. Obviously, for our audience of tax and accounting firms and registered investment advisors, we're really going to kind of discuss how you guys can start collaborating on this aspect of your current services. So we're going to discuss how AI is upending this process, making it more efficient and effective than ever before. Bloomberg just came out very recently with a big article talking about AI and technology and tax harvesting. So David will share some insights on why year-round tax harvesting provides better outcomes, the critical role of CPAs and tax professionals in this process, and how you can collaborate with other RIAs in your network to drive real-time AI-driven solutions. So David, before we jump in, why don't you say hello and let's get this thing going.
Thank you, Lee. Super excited to be here. And you're so kind for introduction. I'm excited for this journey forward. I love the podcast. Looking forward to your questions.
You got it. So let's define, and I know that we're not trying to do this for the consumer market. We are trying to talk to the tax and accounting CPA firms, RIAs, but let's just define it from a basic thing of what tax harvesting is and why it's important. I find there's 4 main points or data points on tax loss harvesting, why they're good. So offsetting capital gains, reductions of ordinary income, tax savings through deferral, portfolio rebalancing. You know, if you could start from a kind of a basic level of why it's important, and then we're going to go into why year-round and or real-time tax harvesting is so beneficial.
So, of course, tax loss harvesting as a concept has been there for some time. It's well known the U.S. is a tax-heavy system as we go from administration to administration, more so than the past. And so for people who know how to execute an effective, an efficient, and a correct tax loss harvesting strategy, the income over time accumulates, and it's a tremendous game changer. And tax loss harvesting in a nutshell meant that a smart way to harvest your tax losses without affecting the upside of your public asset management, with the gain from the principles that you have invested over time. There's the concept of a long-term gain or loss, and there's the concept of a short-term gain or loss. And how do you optimize against the gain through the losses? And in a compliant manner, there's many regulations, and they keep changing all the time. It's a cracks the issue, and there's a wash sales and so on and so forth. Linvest21's joint venture with CountingWorks, providing the tax alpha platform, does exactly that in a systematic way with AI-centric solution, which we'll talk a lot more about.
So let's get into kind of the reasoning why, and we've been having discussions with a lot of different CPAs, CFPs, RAs out there, and getting various, the whole thing with a new product, a new concept is you discuss things, you iterate, you listen, you kind of fine tune. But some of the things that I find interesting is tax harvesting is always thought of as just a year-end concept. Why would I do it year round? That puts me at risk. What if I sell at the wrong time and it continues to go up? But the reality is, and we can reference an MIT study about the actual alpha difference. So how much more money will you receive if you're harvesting these losses throughout the year versus just doing it at one time? And studies have gone in from the conservative side to 0.5 point to 1.5, right? So I think the MIT, which was really comprehensive, went back to the 1920s. I think it was like 1.1. So talk about a little bit about why that is true, and then how the time value of money really compounds that into really big numbers.
Just extending the point of MIT pivotal study that you referred to, if tax loss harvesting is done right over time, and particularly on long-term investors, the compound benefit of that is tremendous, and it will exponentialize over time. Back to the topic of year-end harvesting versus intra-year harvesting. With the older technologies, the tax loss harvesting is more of a one-year-end events, whereby people look at the rebalancing portfolio to make sure that the year-long activities culminating into the harvesting activity itself. That is because most people does not have the intra-year alpha view. When we talk about alpha in the institutional investment, it meant excess return. An alpha view means a predictive model, both on single stock level, single bond level, or single sector level, and a cap size level, so on and so forth. Now, with AI technology, with the newer techniques in computational finance, we combine the forward-looking view with the tax loss harvesting calculations. One can soon see the benefit of harvesting loss early in the year without impacting the stock or bond upside through that journey. And therefore, you can both harvesting the loss while releasing the capital for reinvesting purposes. And if you do this smartly over time in an intra-year basis, with a automatic tax loss compliance, wash sales and so on and so forth, where you're not breaking any laws, you will see your loss accumulates, which can offset a larger and larger gain. And the capital you release through the tax loss harvesting itself will be reinvested, and therefore the time value of money kick in, and therefore you're making your money work a lot harder.
So let's talk about that. You said, are people actually giving their preferences of where they think the market's going? Is an IRA directing that? Obviously, we're going to talk about your platform and the software that you developed on how that works, but kind of explain that side of things a little bit.
I'll just take a half step back and I'll come to that question right after. I think what really make me excited of their journey of Alpha CoPilot / Tax Alpha and the joint venture between some of us and the CountingWorks, for example, is that for the first time in modern history, there's the opportunity to create a virtual family office setup, whereby accounting professionals like CPAs can join in hand with RIAs, FAs, and CFPs to create that joint knowledge base, where accountants will map out the start of year accounting strategy and tax strategy, and we'll file at a year end following that strategy what is most optimal for the clients. On an intra-year basis, the CPAs and accountants can have a joint IP process with their RIA friends to manage tax loss and tax harvesting effectively to that strategy set up at the beginning of the year. We have to understand our CPAs and RIAs are very different professionals. What they know are different. But if you put them together, their skill sets, that's incredible. So that comes to the question. The CPAs and our accounting professionals know a lot about this client, both public assets, stock, bond, ETF, as well as private assets, airplanes, Airbnbs, and so on and so forth. And if our platform, Linvest21 or Alpha CoPilot, Tax Alpha, can be that joint platform, sharing that information to the RIAs, who are professional portfolio managers, who have a view on the market, be it macro or be it micro, be it single stock, you can combine that knowledge with the unrealized gain and loss forward-looking, then you can produce genuinely a map, an action plan for what tax loss we should harvest now, early in the year, to the tone of the prediction and therefore multiply the money effect over time.
So as you said, let's go back one step further. A lot of these decisions right now are done in a vacuum, so to speak, meaning the IRA is guiding this or the accountant is guiding this. They're very often not collaborating together. So obviously that can create issues where you may have sold some things privately that the IRA didn't know. Let's say you had a big gain coming up or you didn't plan effectively for it and you had some big losses. So why do you think like the old way is so ready to change and why this is a better way to do a collaboration and year-round harvesting?
Great question. I think fundamentally it requires the confluence and intersection with three deep domain for this to happen. This is why it didn't happen so far, even though the investment history has been so long. It requires deep AI, deep finance, and deep tech. And in the last 23 months, it's the first time the three force has come together and therefore made this available. Imagine a platform like TextAlpha that we're talking about here, having CPAs on it, providing information of the clients, both public asset space and a private asset space. And in the private asset space, a forecasting and the forward-looking view of what client activity would come. For example, in 3 months' time, this particular client want to sell the airplane he has, or you want to buy an Airbnb, or you want to sell the violin that your grandparents have left to you over time. And what does that asset gain and loss look like in the privates? Passing that information to your professional money manager in RIA who has public asset view, but does never had a private asset view, and put that one and one together, therefore being able to realize the loss and gain through the joint portfolio rebalancing, and therefore a gain or a loss on the airplane sales become a offsetting effect for a NVIDIA sale that has just gained you $1 million without tax consequence. I hope that makes sense.
No, it totally does. And obviously we're bought in and we believe in it, but there's still a lot of I'm going to call friction or I've done it this way. Why do I need to change? This opens me up to new risk. And some comments that I have is the reality is this technology is here, whether you like it or not, and it works and it's super, super powerful. So kind of explain how AI is changing from a data input point of view. I'm doing AI webinars, training webinars weekly now, having hundreds and hundreds of people. I had a person from yesterday. So you get the positive, oh my God, this is the greatest thing ever. Thank you so much. And then you get the negative. I'm just a tax pro. I just do tax preparation. Why does AI matter to me at all? And it's like, oh my God, all these opportunities in front of you, all these things are ways to kind of change the way you do things to be more proactive on your advice are available. That's why AI matters. But the reality is, for a profession that is a little hesitant to change, I think there's a couple issues they're going to worry about. So trusting the data, trusting the recommendations. You have added kind of a human in the loop review, and that's the beauty of it, but kind of address that issue a little bit.
It's a packed question. I'll decompose a little bit, but it's a great question. From the angle of why AI is a game changer, combining fin and tech. For the longest time, people didn't realize that the data underpinning each one of the activity we do are so tremendously wide and deep. Human can only process so much. For example, in a single stock research domain for professional institutional money management, for any given stock, the data from the current day to historicalized data, as well as the sector and the country and region asset class that the stock is sitting in, is minimum 10 gig, if not 100 gig. If you time that by 3,000 security in Frank Russell 3,000, that is terabytes. No human in their right mind can process that data and intelligently. AI has enabled that. Now, you just enabled a giant data processing engine that is intelligent. What about compliance? When you come to a single stock investing, be it a CPA or be it RIA, the amount of regulation that's put on us right now is tremendous. And not only that, it changes every day. So how do you be adaptive be able to automate that compliance journey. Therefore, you're never step out of compliance. You're highly adaptive, super important. And AI has enabled that with traditional computational and cloud. Now, what about all the computational nuances? Each one of this trillions of data, compute them into something that actually is predictive, actually is actionable, is tremendous data. What about real-time information? There's a war going on, 3 wars going on right now. So what happened overnight? And how do you react to that when you wake up? Those things are why AI is so important. Now, we can all choose to live the life of our grandparents. Totally cool. You just have to know your neighbor is moving.
No,
And you don't want to be wake
100%.
up.
And something you brought up, I think, is quite interesting. And what I think is the greatest part about what this technology wave is doing, it is enabling the smaller, mid-sized firms, professionals to have access to the same tools, algorithms that only the big, wealthy 3 or 4 brands had before. And to me, that is a great equalizer. You came from that world. How do you see the opportunity now for, obviously I'm close with the CPA enrolled agents, so the independent tax and accounting firms, 1 to 50. How do you see kind of these opportunities and this knowledge and insight that they never could have accessed before because they couldn't afford the licensing fees, but now we can have it. So it's kind of an equalizer. What is your thoughts on that?
I think the impact of this, everything we just talked about, accommodating to AI fintech, is nothing less than the invention of fire. And you said equalizer, that was a great term. And I'll say a giant democratizer, if that's an English word. I lost all my hair in 34 years. It was never my parents. And learning all the trades and making all the mistakes. I would say 2 things. For the general CPA public, the profession, for the first time, they will be equipped with near real-time financial knowledge that they never had. And this is guided, trained, observed, regulated, automatically computed. It's B2B. It does require a level of human intervention in terms of human in the loop. So therefore, we are at early journey, always been careful, but the value it adds is undebatable. And for the traditional RIA FA, who are anywhere from 5 people to 25 people, $100 million to $1 billion, they never had a Wall Street budget of research, $1 billion each year. The amount of information inequality was tremendous. Getting out of the gate, we're losing. Now, AI changed that game altogether. The Alpha CoPilot that I'm about to demo a little bit on the tail end of this presentation or podcast will showcase a lot of that. What used to cost $1 billion in research and professional investment processes from research to portfolio management to risk and performance management to proactive, customized client experience on client-facing activities are all AI-tized, agentized. And if you are able to be the first mover, collaborate in firm like yours and mine, the benefit are self-explanatory and will be profound.
So you mentioned a little bit, and I think this is a term I go through in all of my podcasts and in my webinar training, and I'm teaching pros what an agent is. And it is something I think that everyone in the profession needs to understand. I look at it as labor. And as you said, a human cannot go through gigabytes and gigabytes of data and analyze it and spit out results that can be, oh, wow, I can act on this now. So kind of explain how this, basically what we're doing, your firm, what I'm doing with all our AI agents is we're creating kind of labor alternatives. So you used to not be able to do the tax research in minutes that you can do today with AI agents, right? It used to have staff. It used to it'd take hours and hours. So kind of explain the concept of what an intelligent agent can do and how it's different than a regular like chat bot prompt experience.
I'll try to explain that in 2 prompts. The first one is that think of agent as AI-tized human, and that with the skill sets in the domain. and they're trained. They're not expert of everything, but they're expert in one or two things. The training of the agents are very intentional and very domain specific and very deep. And second, all the frontier model, which we call FM, the large ones that cost billions and billions to train, they're like a very powerful child. They actually don't really know their profession. They just know a lot, but without guiding, they're running random, just super powerful. And an AI agent is a training process to lead the conversation, to guide the conversation, to focus the conversation intentionally of the AI engine to a domain of expertise. AI has a third property, which is a collaboration. How do you put AI agents together from research to portfolio management to risk management to performance, and whereby they sequentially do their work, but challenging each other in a domain of expertise, therefore producing the best insight for the consumer and client? That is a tremendously powerful attribute.
All right. So now let's talk about, again, the role and how you see the future here with the CPA, the tax world, and the professional advisor side, so the IRA network. So, how can technology now allow these two sides to communicate and collaborate like they couldn't before?
So the V1 of Tax Alpha in collaboration with CountingWorks was try to create that very platform, whereby for the first time, virtual family office can be running on AI, fin, and tech, and the most cutting edge fashion, automating and providing insights in many of the things we just talked about, which I won't repeat here. And that platform should facilitate communications and making sure that the two professions can speak the same language. Both professions are empowered with things they didn't know, but the counterparty knows. Therefore, they're 1 + 1 = 3. So that's the first goal. And the second goal is that how do we empower the CPAs who is laboring to produce a manual capital gain and loss prediction on private assets these days? A tremendous amount of work, highly error prone and laborious, and turn that into a systematic approach with a model behind it, whereby we can be proactive in evaluating and predicting capital gain and losses based on the current value and the predicted events that's upcoming per client, and then pass that information to traditionally public asset only RIA friends, and who have access to tax loss and gain capability and a loss level information, and thereby we can create a super portfolio that the public and private asset can be joined and rebalancing on a monthly, quarterly basis. Therefore, gain and loss across different asset types can be leveraged in a way that's constructive to the final outcome of accumulated long-term capital appreciation for our end client. And do so in a compliant way, do so in a real-time way, and do so in a way that is proactive, not reactive.
So we're going to get into, I want to show people what this looks like, but I'm going to do the counter. Well, why shouldn't I just stay in my own lane? I've been a traditional CPA firm. This is what I do. Obviously, they are getting more proactive in tax planning. They're selling subscription services to that now. They're seeing the benefit. They're seeing a lot of automation and commoditization of a lot of what they may have been doing in the past. And it's like, to me, it opens new doors. But what would you say to both sides? The IRA side, hey, that's not really my lane. That's my lane. I should be doing this. CPA should be over here. The CPA, the both ways. Do you see the world expanding and they're starting to act? You talked about family office, this collaboration. I think the end goal is the best financial outcome for our clients, right? But there's risk, there's reputation risk. What if things don't go well? What if someone makes a bad call? Those kind of things. So how would you kind of counter that or address that?
I would just say the benefit upside that we're talking about are multifold, and I'll come back to some of the risk as well. In my opinion, for CPA friends of ours, the ideations become much richer, and the CPAs become much more aware. And the arsenals to communicate to clients, not just a year beginning planning, a year-end filing or quarterly filing, but becomes hey, you could do this. This could be done. This is tax efficient. Let me use this information to talk to my RA friends. So therefore, they become much more credible to their end client and much more bridging and facilitating an investment processes to the traditional CPA process. And they become much more powerful in that context. Not to mention that the automation of private assets evaluation, gain and loss calculation, all that good stuff are automated. And therefore, our CPA friends can focus on client activities, customization for their solutions, seeing them day in, day out, and be a voice of reason and voice of knowledge. So in summary, client engagement trust will increase. Knowledge and situational awareness will increase. The value will be adding. And efficiency would increase through automation. And the facilitation between the CPA to the RA conversation become much more fluid because the language is the same. So that's for our CPA friends. RIA, I think for the first time in history, that there's an automated way for them to gain access to private asset gain and loss situation evaluation. And thereby they can produce rebalancing situations that is a super portfolio and never done before. And the power of that, I think, is immense. A friend of mine worked for a very large data firm, the biggest in the world. They have a $4 billion technology budget for 2025. And the biggest portion of that budget did not go to AI. It went to privates. And that's private asset valuation and projection. That's how important that is. So that opens a very different market. And when the RIA can do that, so many CPAs want to engage them because they have ability that no one else can match. Coming back to the safety of AI, I think one thing everybody should know. A platform built like ours, most modern cutting-edge technology platform for tax alpha, are cloud-centric and cloud-native. It provides the first level of defense for everything we do, from DoD and stuff like that, all the way to truly encrypted channels and all that good stuff. Second, majority of the frontier models, if not 100%, provides the ability that whatever data we give it to it, we can restrict it from learning from our data. So it's only a passive temporal data usage. Therefore, they give us the intelligence, not keeping our data. That's very important. And every one of the data model providers, we're multi-model shop. Any model we use, that's rule number one. Third, you talked about the 3 patents we have, utility patent and applied AI. 2 of them is in the domain of non-hallucination, consistency, data protection. So everything we do is non-hallucination first, do no harm. And the amount of effort and the capital allocation we do in our technology development that goes to that ideation and safety of ideation is paramount as number one. And last but not least, the stuff we do in collaboration with CountingWorks, for example, is V1. We iterate with our clients in this journey to gain an absolute competitive advantage. And it is many times three step forward, half step back. But in that journey, working with our clients, we're listening very carefully. So this journey will be a joint journey. The benefit will be obvious, but it's human in the loop from the get-go.
No, and that's awesome. So let's jump into, and so for our podcast audio only listeners, we are going to do some screen sharing here. We're going to try to be as descriptive as possible. But David, if you would go ahead and share screen, and let's just kind of show the audience what a AI tax harvesting tool looks like. Again, whether you use our technology or others, I think it's important just to start looking at what's happening. So David, if you want to go ahead and start up a little overview of your software, that'd be great.
Can you see what I'm seeing here?
I can. Okay.
So the Tax Alpha platform is branded as Alpha CoPilot on the left-hand side. It's a multi-role platform, and it supports black and white by default. So anybody who's a Bloomberg terminal user, have your day here. The platform is accommodating both CPA advisors, CPA accountants plus advisor in near future. There's an element of both right now already. It has ability to look at the tax alpha reports linking tax alpha with stock prediction model, and linking the platform to the asset, the capital, private asset valuation and the projection. On the top here, you will see a different way of navigating the portfolio by states, cities, clients, and a portfolio. And on the right-hand side here on top, you will see transactional information whereby the events we have discovered, how many things we should be sending to our RIA friends as a CPA, how many has been processed, how many has been dealt with, how many is closed. Therefore, we have a tracking of events. And towards the right, there's a multi-way to rank our RIA friends and more for the intention of building their business with us. So the highest ranking RIA friends will be the first and second referral for our CPA firms and so on and so forth. So it's built from the get-go as a collaborating platform. On the left-hand side here, obviously, if you want to see more things, you can just hide and or display. We can, as a CPA firm, we can add additional clients by doing this. So security is such that I got locked out. So I'm going to log in again as a user, and coming here, you will see this is actually a collaboration platform. So I have to log in as Lee yourself. So give me a quick second. Let me see if I can find my entry point, which is a good point of how you would use the system. So as you come in the system, by the way, there's a extensive tutorial, video, audio, and text-based. So coming back to where I was, I got logged out because I timed out on my session. Speaking of security and speaking of collaboration, you also saw how I got from my friend CountingWorks to here. So here you can edit clients. You can add as a client Murphy, client one is a testing account. You can add additional accounts. You can edit accounts from here. You can see how many events are there to be dealt with, as the number 11 indicates. You can go through all my account for Murphy client one. We have three different reports. Public asset summary. I'll go through that a little bit. Private asset summary, gain and losses and predictions. Public and private asset joint review. This is obviously a testing count. Anybody who's in trial will be linking up to their real custodian, to their real custodian companies, and so on and so forth. You will see things live here. Now, just to walk through the big picture, after the overall Murphy clients review, you can go into a single account review, portfolio summary, and tax advice on a single account basis, which I'll go into as well briefly. And just to walk through, before I dive into that, I just want to walk through a little bit more. There's a feedback loop where people can speak their feedback to us. It will be AI translate into a transcript, which we'll capture, and those be features added or bugs fixed, so on and so forth. You can join the journey through the button here. Back to the topic. A CPA, you will see the big view, the big picture view. You will see a single account view. In public asset view, for example, if you go in there, you will see your asset holdings, top 10. You will see the allocation by sectors of your joint portfolio. Let's say Murphy one, if that's David Lin, for example, all my accounts in one big picture. Going under, you will see portfolio that has a short-term portfolio and a long-term portfolio in terms of gain and loss. You have visualizations on the realized gain and loss and unrealized gain and loss, both short-term and long-term. Top 10 holdings, top 5 holdings, you can by value. You can also do top 10 performance, bottom 10 performance, and so on and so forth. Portfolio analysis on best performer, worst performer, risk assessment, tax assessment, and the recommendations, and so on and so forth. Going to privates, very interesting, less graphic, but quite dense. Let's say, Lee, you're my client, unclient, that is, and you own a lot of things. Beside your public portfolio, where your RIA is managing, you have cars, and you have commercial buildings, antiques, lands, blah, blah, blah. AI would work with us to generate systematically and by model the valuation, the purchasing price, the current valuation, and gain and loss if you have to sell it today. And going forward, it also provides you valuation projections. So, for example, this is the current day valuation of a commercial building. Here's a projection 3 months from now, and here's the confidence level, 95% upper bound, lower bound. So we know it's a real assessment. It's living in a real life, and we give you a confidence level to a range of value, and potential tax implications and so on and so forth. So therefore, you have current day valuation of your private assets. It could include the violins, pianos from your granddad. It could include Picasso's paintings. If you have them, good for you. And what is valuation now, and what is valuation a period forward from now? So in case you are planning for sales, you can assess the consequence of that sales. And there's a lot of explanations on why and why not, reference to tax code and blah blah blah, to make it a much more concrete and accurate tax implications on what you should and should not do. And this information will be passed to your RIA friends, who all of a sudden is gaining a complete second half of the picture, and therefore being able to rebalance your portfolio and leverage your stock loss or gain in lieu of your private loss and gain predicted, right? Now, moving into the public and private asset summary, you will see a majority of your assets are public asset. Some of your assets are private, including lands, commercials, and so on and so forth. It's a big picture view. By the way, before today, very hard to get this view. I still cannot get this view from my own accountant and private bank. And here's your public security overview, your private overview, blah, 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 performance analysis, risk analysis, and recommendations. Again, I'm not going into the nuances here. I'm just letting you know what it does. This is the big picture across all accounts. Going to
so what's that? I'm going to stop you for a second. So from a CPA standpoint, I now have access to, I set up my clients' custodian accounts. They got an approval. It's now doing real-time feeding of all of their assets. And I'm now able to come in here. It will flag for me, hey, these clients have opportunities to tax harvest. Click on the report. I then click on the report. I can then analyze it. I can make any edits to it. And then I can forward that to the IRA partner, who then can execute any of the actions that we want. And that's kind of the beauty of what this collaboration system does.
So well said. Absolutely. By the way, since you're talking about a topic, there's a lot of nuanced technology built in that, which I will just give a glimpse of that. For us to do tax harvesting, the private asset gain and loss and valuation properly, there are systematic file uploads that we collaborate with our CPAs, our RAs, most of CPAs. Therefore, we know the past history of this client, the current setting of this clients, and where this client's going in future. And it's iterative, and this is regulated, and it's automatic. So I just want to highlight that before we go any further. Make sense so far, Lee?
Yeah, totally. So I think we're kind of good on the usage of the CPA side. Just real quick, if you can show how I would forward that report to the IRA.
Yeah. 100%. So before that, I'll just do 30 seconds on the actual tax report for Murphy Client 1 on account 1. So Lee, as you can see, your portfolio is broken down. This is mostly equity, because equity is the most potent and most volatile. Fixed income is typically for carry because they're coupon based. So when you look at equity, this system is systematically every night and in real time, if you're willing to pay for more tokens, to tell you to harvest this $152,000 gain short term. You should sell this. Those are losses, by the way. And the reason you sell this is because the sector this three securities sitting in is kind of in a doghouse, meaning you're not selling your winner, you're selling your loser. And your loser is actually making loss. And your winner here, the one you're selling, is also going forward it will be going down as well. So therefore, you're willing to sell the gain. You're willing to sell 3 losses to offset the gain. So therefore, you have no tax consequence. So it calls for a marriage between what is happening to the portfolio now, the gain and loss you could harvest, but also your forward-looking prediction from the professional portfolio manager from RIA. They all have that thing. That's how they manage money. So when you join when you join the 2 intellectual property, you can do intra-year tax harvesting as opposed to November only. This is what we talked about earlier. Now, just because you sold and buy loss doesn't mean that you don't want to buy them back. But sometimes the market does change. A stock that was in a doghouse becomes all of a sudden valuable because the sector turned around, that they change a new CEO, and so on and so forth. How do you know systematically when you should be selling and when you should be buying back? Now, we all know the watch sale rule, which is a pre-30-day and post-30-day and cross everything. So you need to be very careful. And the Linvest21 tax alpha platform, in conjunction with CountingWorks, does just that visually. So you can see this is today. You have 3 stocks that you sold on the other days, and this is the price you sold it. And here's what the price is. You can see the price. If the price is lower than the selling price before the watch sale time finished, you can buy them back because the market has turned on the stock. This whole thing is visualized in real time. Now, I want to send this report to my RA friends. I want to give them a heads up and to say, hey, my tax alpha platform has just told me these are the actionable items. Can you verify them? If they do, can we do it together? And when you're done, can you let me know? So I communicate to my end client, therefore making me a lot more credible and a lot more powerful because I can be intra-year active. Now, before you send it, you have the ability to edit the reports to say, I don't really like this verbiage. It's a little too sharp. That's too soft, and so on and so forth. Once edited, you can save it. Once you saved it, you check this, and that's ready to send. And when I hit this button to send, the report's going out. You can see it says 4 p.m. successfully. So the RA has received it. I'm going to wait for a response from there on forward. And that's what we talked about, a collaboration. On the RA side, they have the corresponding capability coming back and going forward. Therefore, forging the collaboration. This button was to track, audit trail, all the communication on this stuff for legal purposes, for collaboration purposes, and so on and so forth. Lee, does that make sense?
No, absolutely. So we're pushing the time here a little bit. I think you've kind of shown a good glimpse. Do you want to cover a little bit of what the RA side is and some of the abilities to put in their kind of beliefs on where things are going, and the market side? Do you want to log out and do a different view here?
100%. So remember, we talked about system is multi-role, so you can be anybody you want. Here, I'm acting as an equity quant portfolio manager, RIA. The things here are way too much, so I'm not going to go through everything. But suffice to know that there's a very deep investor intelligence, whereby when you come in every morning, 8 o'clock with your coffee, it already tells you what to do with market, with portfolio, with stock, with clients, all that good stuff. There's a systematic research here for AI-driven research, ideations on what to buy, what to sell, sector, country, region, cap sizes, single stocks, so on and so forth. Everything's visualized for you. I'm not going to go into deep. And with alpha model generation for you on the fly, real time, and stuff that people only dream about over the years. And that is fully visualized. I can do Amazon, Microsoft right now, and I can generate alpha model in your face. And this is a 36-agent model that gives you a 35-page long documentation, 14 sections, predicting the single stock price 12 months forward with a massive write-up. Something that take us 6 minutes to do, but will take a Harvard MBA student 2 weeks. I'm not going to go through everything here. And with an intense portfolio management platform, black and white, anything you wanted to do, I'm not going to go through everything. It's crazy deep. But this would have gave the RIA friends the real power of managing research, portfolio risk, and performance, culminating to what we call agentic CIO, very similar to the concept of outsourced CIO, where you can select the definition of CIO. CIO stands for Chief Information Officer, the most important people. And that would simulate a collaboration of research assistant, research team itself, fundamental quantitative, portfolio management team itself, as well as the CPM, which stands for Client Portfolio Manager, who can write up customized, speaking to the pain, client reports, culminating information from market change to alpha change to portfolio change to risk change into an article that speak to the pain or what keep you up at the night for end clients, and information that's all inclusive from A to Z, explainable investing.
Yeah, no, this is quite impressive. And again, I don't want this to be a full demo of the platform. I just wanted to kind of tease the audience to understand what can be and what is there today, how these AI agents, tools like this can automate so many things that you couldn't only dream of doing before. And again, leveling the playing field for smaller firms now to have access to some really powerful stuff. So is there anything else you want to add before we dump out of this screen share and then we'll start closing up?
I think you hit a nail. That democratization that you just talked about, the equalizer. What you're seeing here is my 34 years on Wall Street at its most pinnacle space. The most sophisticated financial technology at the most sophisticated company for 3 decades. And what you have is that knowledge and that experience, that lesson learned, plus 50% more that large company would never do. Because this AI is scarily capable, and that threatened a lot of people's job. And I don't want to be there to be that person. I want to be constructive to people who is craving for an institutional grade investment technology at a bleeding edge.
Yeah, no, it's impressive. So let's go ahead and stop sharing the screen if you could, and let's wrap this thing up. I think your video went off as well. So let's just go through this real quick. So again, I didn't want this podcast to be overly salesy. It is a tool that we have created in CountingWorks Pro. If you're a subscriber, you have access to it in our new marketplace section. But definitely reach out to us if you're interested. You can email help@countingworkspro.com and just type tax alpha in the subject name, and then we'll have some people kind of, hey, I'm interested, I want to see this, and we'll go ahead and have some reps set up a discovery call so you can kind of get the power of it. But I think, David, I hope, these are just glimpses. And every time, we do this, even on the webinars that I've been doing, it's scary at times. You're like, oh my God, again, we were saying you could trust it, but I think you need to use it and use it more and more until you start building your own confidence in it. And I think over time, that's what happened with me. The first time I started using ChatGPT, writing prompts, we were doing tax research questions in it. It was 50% accurate. We then built our own layer of knowledge base on top, and we got this thing so fine-tuned that's, it's less than a percentage if there's any errors at all, and it's game-changing, and that's just in 6 months. So where is the world going? It's going to be crazy. So some key recaps I want to do real quick. Hopefully everyone maybe buys into the year-round tax harvesting strategies. I think MIT's and all these other research tools have shown it does provide better alpha. Time value of money adds up, and it becomes, in larger portfolios, a huge number. Integrating the private public sector and instead of people, everyone doing it in their own little silos, now having them integrate, huge value to the client, huge value to their financial outcomes. I think that is an important thing. Well, hopefully we're kind of saying the roles of the IRA and CPA, maybe they should not just sit in their lanes anymore. We'll see. I think some proactive, progressive accountants and IRAs are going to jump on this thing. I feel over time, it's not a matter of if, it's when these type of technology platforms are going to arrive. So either you embrace them and you start utilizing them as a tool and you have the relationship already with all these clients. They trust you. You don't want them starting to jump, onto some other tech company and, that just has a tech-enabled tool that doesn't have a human in the loop or the same type of guardrails that we have in kind of the way we set this up. So definitely, I think there's some real value. Maybe we're pushing the envelope a little bit, but it's definitely something to be considered. So let's wrap this up, David, and kind of any last words you want for our audience before we turn this down.
No, I thank you for the opportunity. I enjoyed it thoroughly. I guess the last thing I'll say, incidentally, today is the production release of our demo version of Tax Alpha through the CW platform. I'd love to hear people jumping in to try your hands wet to get a real life experience and give us feedback. And looking forward to see a lot more of that. And we'll make it this equalizing or democratizing process profoundly impactful to most of you who's willing to try.
Yeah, awesome. So if you are interested, go to CountingWorksPro.com. You can set up a free trial, schedule a demo, a strategy call. Again, if you want to just see the tax alpha tool, just email us, help@CountingWorksPro.com. We'll gladly have some of our experts reach out to you and give you a tour. So again, thank you for listening to our podcast. We usually are not as so salesy, but I think you had to kind of hear what this tool can do. You had to kind of understand, it in real time. So hopefully you won't be too upset with that, but I really appreciate your time. We look forward to some exciting topics here in the near future, and hopefully you'll continue to subscribe and share the Growth Minded Accountant with your peers. Thank you again.
Thank you.